Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. And we get our Friday together, and I always look forward to it, and here we are.
And as usual, we like to answer listener questions. We have 3 of them today. The first one comes from David. Greeting, guys, and thanks for a great show. Many experts are predicting a major down cycle in the commodities, as has started with lumber. Are gold and silver commodities too? Does this imply a down cycle in that sector as well? How will that play out? Thanks, David.
Yeah, I don't know that there's that many people calling for a down cycle in the commodities. I still read it as inflation is going to come back, and it's the super cycle for commodities. Now, they've been whacked, which is fine, because we figured it'd go up until about mid-year, and they've been fine. Now, as to gold and silver, commodities too, gold in the final analysis is always money, cash, specie. They call it all kinds of things. And silver is kind of like a tag-along thing. So I think silver is more like a commodity than gold is. And the backup for this, Jim, is that in the final stages of a great financial bubble, and we've chased this back to, I think, about 1830, is that copper's real price goes up in the final stages of the bubble because there is a business expansion. And copper has been rising nicely in real terms, as deflated by this consumer price index. Now, also in the final stage of a great bubble, gold's real price goes down. And it hit a huge momentum peak last summer in July, and that's when we advised, taking some money off the table for the precious metals sector. And then gold has, in real terms, has come down quite a bit. But for the last couple of months, and the latest posting is June, it's up. So I think it's beginning to look forward to its a more of a major and lengthy advance, which is, and when gold's real price is going up, it improves the profitability of the gold mining sector. So, and this is what happens in a post-bubble deflation. Copper's real price goes down, and gold's real price goes up. So, an answer to the question, is gold a commodity? No, because it's money underneath it all, and it acts like money. It has been acting like money during this leg up on the great financial bubble, which great financial bubble should be completing sometime, as we've been calling, for around mid-year. So the next few months are going to be very interesting, and thanks very much for that question. It was on some good points.
Our second question comes from our friend Justin in Berkeley. Hello, Bob and Jim. Bob, being a great historian on historical financial shenanigans and get-rich-quick schemes, my question is, was the South Seas bubble the first instance of converting bad government debt to some other asset class such as stock equity? From what I read on Wikipedia, these guys make the Federal Reserve look like choir boys.
Justin, that's a good one. You've done some good research. Yeah, it was in the early 1700s. England was sort of the senior place, and it had a war, and so you had prices going up and inflation, and then the war came to an end, and leaving the government with a huge amount of debt that was very difficult to service. So whatever that debt form was in was marked down hugely, and they were having difficulty servicing it. So along came the South Sea bubble. We won't go into it. It sort of had rights to make huge amounts of money in faraway places, and that was became an item in the stock market. So they found that they could, they had options on the stock, and people were buying it, and they were converting the options, which was putting money into the Treasury. Then somehow the Treasury was assisting the government in looking after maturing debt. So it became a fabulous party, and so there was a lot of corruption in there. And as one historian a long time ago said, there was somebody had beat a path in the grass from the South Sea Company's office to the House of Commons, where the bribes were taking place. So many members of Parliament were bribed to go along with the big party, and it became a huge party. And the South Sea Company had its peak in late June, and then dithered around for the rest of the summer and crashed in the fall, right back to down, like it reached 1,000 pounds at its high, and then it fell all the way down to something like 120 pounds, leaving a number of people quite embarrassed, including Isaac Newton. So it's a fascinating subject, and all of the great financial bubbles, and this is number 6, all of them as they occurred in London peaked in either May or June. So we'll see how this one goes in London. Now in New York, on the bubble years, where London would have peaked in May or June, in 1873, the New York market was significant enough to be a player in the game. And 1873 bubble, New York set its high in early September, as was the case in September of 1929. So this is what we're using. Possible peak for the huge, like, senior indexes in mid-year, and then New York might have a secondary thrust up into September, and the market's running out of steam and players and stuff like that. But, yeah, then did they make the Federal Reserve look like choir boys? No, I think underneath it all you could say that the Federal Reserve is quite corrupt, intellectually corrupt. Nobody's bribing maybe they might even be up to 500 economists at the Fed now, but the corruption is power and chasing a theory that never works. So it's going to be fascinating to see how it all works out here over the next couple of months.
Yes, made up of economists. Somebody once described an economist as someone who has never met a regular person, but they've had a regular person described to them.
I hadn't heard that one.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, a question from Dirk. He says, "Hi, Jim and Bob. If Canada is in a real estate bubble, would there be any signs or signals before it bursts?"
Yeah, that's a good one. I remember in previous real estate bubbles, a long time ago, somebody in the States published a short book on how to watch for the top, and it was for sale advertisements and class, all that sort of stuff then. But no, I think the housing bubble, and as we know, it's been exceptionally strong in Toronto and in Vancouver, is likely peaking with the speculation in stocks, junk bonds, and commodities. So it's peaking now. Now, I know of someone who is interested in buying a house in Vancouver, and I just heard yesterday that one property they've been looking at, and they've come off $300,000 from the asking price of a month ago. And then also, if you go to Wolf Richter in the States, his site, he's very good at updating the house price market in the States and the number of houses on offer and inventory and all that sort of stuff. And it looks like the intensity of the action in buying residential real estate has peaked. This is not to say that the prices are all peaked yet, but the various things associated with the bubble in housing seem to be peaking. And I remember 2006, 2007 high in real estate in the States, and it came down hard because the sellers in each region in the States were many more than the buyers from Asia, whereas in Canada, the market's smaller and thinner, and the buyers from Asia remained insistent, so we didn't get the hit that the States got. But so this is just suggesting to me now that maybe on this one, the residential market in Canada, and particularly Toronto and Vancouver, is going to get hit harder than it was after 2007. It just sort of went sideways for a bit. But it's going to be an interesting period, and that's actually a timely question. So thanks very much, Dirk.
And if you want background, if you want information on the Canadian real estate market, I recommend the book Surviving. It's called Surviving When the Bubble Bursts. Let's get it right, Jim. It's by Hilliard Macbeth, a friend of the show. When the Bubble Bursts, Surviving the Canadian Real Estate Crash, the second edition of that book, which takes a look at the conditions going on right now. And if you're looking at the American market, check out the Robert Campbell Timing Letter. And both of them have a good handle on what the situation is on both sides of the border. Now, Bob, taking a look at some of the headlines that caught your attention today. The first one, cash flush Americans lift U.S. retail sales.
Yeah, that you've had the stimulus money, and I like some of the writers in the States are calling them stimmies. Then you've got the running up the credit card debits, and they're leveraged at their brokerage. So that gives the appearance of a lot of money, but it's a lot of borrowed money that can disappear in an instant. So I think it's rather precarious on this factor that all of a sudden this enthusiasm can change quite suddenly. So yeah.
I think both sides of the border, Bob, credit card debt has gone down dramatically because people were using their government stimulus money to pay off their credit card bills.
Yeah, well, I think I saw one after that, Jim, where
all of a sudden the credit card lit up again.
And we're back to the credit card.
Yeah.
Yeah.
Oh, well, it lasted for a bit.
Yeah.
Another headline here, yield farmers chase high returns but risk losing it all, especially, I guess, for the people. We're in an era of record margin debt.
Yeah, well, this one was about the crypto market somewhere.
Yeah.
They're in there, you can get a high return on some kind of a yield instrument. So, and these people have been gathering some kind of income out of it. I read the story, but that was sort of vague. But it's another example of people taking on risk, and hey, it's done voluntarily. And as I remember a cartoon from decades ago, and a caption was, "Come on in, it feels good. All the lemmings are doing it."
I could see somebody getting into a hot tub and there's a great white circling just below.
Oh, yeah. Yeah.
Yeah, the water feels great.
Yeah.
Inflation is here. The headline claims 35 details, though, that will tell you why you should worry about it.
Yeah. Well, that was from one of the big ones, J.P. Morgan or something like that. And those researchers are all on this bandwagon, and it's the 1970s conclusion that the Fed has gone reckless. It's been reckless for decades, but it's now uniquely reckless, and that is going to end up with dollar depreciation and tangible things soaring. And there's even one big name in the States that's calling for a German Weimar Republic inflation of 1922 and 23, where they were printing, and it really was wheelbarrow money. You know, they had to take wheelbarrows full of money around to buy anything. And but that was possible because Germany, prior to the war, was not a strong credit markets in Germany. Then in the war, even less, and then in the post-war inflation, it was hopeless. So they could. That's why they could go straight to the printing presses. But in the United States, the world's senior financial market, the senior currency, and the biggest debt market. So it would be kind of driven by expansion of credit, and then it can be driven by the contraction of credit. So we're staying with the view that the big action has been inflation in financial assets, and for the last 300 years, whenever that completes, it's followed by deflation in most assets. So we'll stay with that one. But this is where I like the headlines from high places, you know, or senior investment houses and places like that, where some analyst recently looking at things decides that this is it, and then you got the other guys, the frustrated commodity guys, who are always calling for a super cycle in commodities, so they think they've got it now. So, but I think we will watch the financial markets, and if the financial markets roll over, then everything will roll over. And that could happen over the next few months. So,
I think when Mark Leibovitz and I were talking yesterday, he said these inflation numbers, he's not worried about it because don't forget, he said last year everything was shut down. Nobody was buying anything because you weren't allowed out of your house in so many American states. So they're just making up for those lost sales now. So really, it's not 5% inflation; it's 2.5%.
Yeah.
You know, we're just doing 2 years worth of shopping in one.
Yeah, it went from straight down for a while, and then to straight up. So it makes a bigger gap from down to up. Yeah, he's got it right there. It's a good way of phrasing it. Yeah.
Yes, and also with these inflation figures, the government doesn't include housing, fuel, or taxes.
Oh, I know that. In the CPI calculation, U.S. or Canada, they do not include government taxation as a cost of living, and I tell you, it really is a member of a part of the cost of living. So, yeah, no, the calculation of the CPI index, particularly in the States, is weird. And they really went strange with it during the Bill Clinton administration because you have many government pensions and services and all that sort of stuff hinged upon the rate of adjusted for the rate of CPI inflation. So all these government services were becoming too expensive, and people were concerned then about deficits. So then they changed the CPI calculation to screw those who are receiving benefits. Oh no, governments can be corrupt. And if they're corrupt for long enough, they can become evil. But then again, with a contraction, that can change. Because people are going to look at, say, the amount of the trillions of dollars that the Fed has spent over the last few years in trying to prevent a contraction, when it was actually time for a great financial bubble. But when this goes bad, then the public's going to say, hey, look, you spent trillions of our tax dollars on a theory that has never worked, that you can prevent a contraction. So I think the Federal Reserve and all central banks on the next contraction will be criticized by true blue economists. And then it will also be condemned by the ordinary people, and they're going to say, you spent trillions on your crazy theories, the theory doesn't work. So I think there's going to be a tremendous condemnation of the Federal Reserve System building and erupting at some time over the next few years. And I'm going to be fascinated to watch for it, Jim.
Bob, thank you so much for chatting with us.
Hey, good to be with you and our listeners on our Fridays.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. As you heard, he loves to answer your questions. You can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.